Hey guys, I'm Pav, lead market analyst here at Swyftx, and we're here to bring you what's moving and shaking this week in crypto. Now, to recap, we have seen a lot of the things that we've been talking about over the last couple of weeks come to fruition and come to play out. We did anticipate that inflation had been a key and hot topic of the market, as well as interest rates, as well as the labor and job market. And Jackson Hole, which was a symposium in Wyoming at the end of last week, didn't disappoint. It really was the first place back a year ago where we saw interest rates come to the forefront of economic policy makers. It had been years since we had seen a drop, and after last year's meeting, we saw the first drop. Last week, we saw the first real hint that the Fed is concerned about the labor market. Now, this is a big one in the sense that the two mandates of the FOMC, or the Federal Open Markets Committee, or the Fed, is jobs and inflation. That's basically it. Keep growth in check, but don't let it get too hot. With the warning that the labor market may not be as strong as they're anticipating, it really opens a door to finally seeing some monetary easing coming in. As we mentioned a few weeks ago in our write-up, there has been still this overwhelming pressure on the market as the Fed continues to run off balance sheets, etc., and not really look to shift interest rates. So the market really took this as an all-in moment to really double down on its expectations for these meetings. So these are the meetings that set things like interest rates. But I'll allude to in the next couple of episodes what else potentially could come about of these meetings that isn't quite interest rate related, but could have a big move on the markets. So make sure you come back for the next one. But we're seeing that the market really is all in 86% at the moment, that there's going to be some sort of ease. And bond markets are indicating 0.25% or 25 basis points as the base case from here. Now, I think that the next big thing from here is we've had the Fed come out and make their remarks. Now it's really a bit of a test of the market's belief that policymakers will actually do what they say they're going to do. And as we mentioned, inflation data has been quite a key topic, even in the month of August, which I'll touch on just next in a little graphic. But we can see that the next big release is tonight, 10:30 p.m. Australian Eastern Standard Time. We have the goods and services inflation, so PCE, that's known as quite commonly. That'll be releasing. So this has been importantly a metric that has been trending higher for the last 3 to 4 months. Again, in an environment where we are seeing inflation be the base case, that it is rising, it'll be interesting to see if the market, even though it sees potentially an increase again or an as an expected figure, could we see the market still have a very positive outlook for risk on assets, as it may see inflation risk be more of an issue down the track that needs to be dealt with, and we're more in a phase of growth still at the moment. So I think that'll be the very key one. And again, before the Jackson Hole speech, which we have down here, I've basically mapped out on a chart of Bitcoin for the month of August how each major inflation data print has come out. Now, just to talk this through, the two big ones here were CPI and PPI. CPI came in a lower than expectation or as expected, which resulted in the market moving higher. Again, this was pre-Jackson Hole, where the Fed had given some more of a hint that September could lead to cuts. And then PPI, so wholesale inflation, actually landed 4 times hotter than the monthly expectations. So that really put a dampener on the party in the sense that Bitcoin had just hit fresh all-time highs, but it seemed like maybe inflation was out of control and that may not have budged the Fed's stance. And lo and behold, we had the Jackson Hole speech where we did hear that inflation may not be as important as something like the job market. So again, we now have the latest data print coming out for inflation in the next couple of hours. This is going to be a big one to see how the market responds. Again, it can be lower than expected, as expected, or above expectations. Either way, I think it's going to be, if we see a lower than expected reading or as expected, the market just may do something similar to what it did with the consumer inflation and print that we saw. We could see some positivity in the market, but it's that hotter than expected one, which I think is a big trust test. Does the market believe that the Fed is still going to look to reduce those rates in monetary policy easings because they're more concerned about job markets? Or does the market not really believe Jerome enough to stay in its positions as we are still about 20 odd days out from the key meeting date? But that's it from me here today at Swyftx. We'll be back again next week. But yeah, we're really setting up for a really interesting end to Q3 here. Catch you next time.